To trade profitably, it's not enough to just follow the trend. You need to consider who is actually creating that trend. Behind every price movement, there are real buyers and sellers. And if there's no activity, no indicators or trend lines will help, the price simply won't move. How can you tell if there's demand or pressure on an asset? The most reliable way is to look at volume. But how exactly do you use volume for trading decisions? The indicator I recommend is the Volume Oscillator. You can find it on TradingView. On the chart, it looks simple, a line that fluctuates around the 0 mark. Settings depend on the time frame. For daily charts, use periods 14 and 28. For shorter time frames, for example, 15-minute charts, use 5 and 20. How to read the volume oscillator? First, volume by itself does not show trend direction. Volume is the fuel behind the move. The higher the volume, the stronger the momentum. The lower the volume, the weaker the move. To determine the direction, look at price. Price rising and volume rising, strong uptrend. Price falling and volume rising, strong downtrend. If price is moving but volume is falling, this is a weak trend. Be cautious, such moves often end in a reversal. Example signals. If price is rising and the volume oscillator shows increasing volume, it indicates a powerful uptrend. If price is falling and volume is increasing, it signals a strong downtrend. If price is going up but volume is decreasing, the trend is weak, and you should be cautious with buys, the move may soon end. The same applies to a downtrend with falling volume. How to trade it? Combine the volume oscillator with support and resistance levels. Example 1. On a stock chart, we see a sideways range with clear support and resistance levels. Volume stays low while the price moves within the range. Then, there is a breakdown, and the volume oscillator spikes sharply, showing an increase in selling pressure. This signals a potential short trade. Example 2. The price reaches a support level, bounces up, and forms a bullish engulfing candle, a strong buy signal. At the same time, the volume oscillator shows rising volume, confirming a strong upward impulse. We now have 3 factors: support level, bullish pattern, and rising volume. This points to a solid buy opportunity. Important, do not enter a trade just because you see a pattern. Volume must confirm the move. Always look for a combination of factors. Strategy number 2, Money Flow Index plus price action. The second tool is the Money Flow Index, MFI, a volume-based indicator that accounts for both price movement and trading volume. It is similar to the Relative Strength Index, RSI, but more accurate for analyzing large player activity. How does the MFI work? If the MFI rises above the upper level, usually 80, the market is overbought and price may reverse downward. If the MFI falls below the lower level, usually 20, the market is oversold and price may move up. Example 1. The price reaches a resistance zone and begins to turn down, confirming the level. Then it returns to the resistance. At this point, MFI is in the overbought zone, which strengthens the signal. This indicates a great selling opportunity. Example 2. Price hits resistance and bounces downward, confirming its strength. As the price approaches that level again, we see momentum slowing and a bearish pattern forming. MFI is in the overbought zone, confirming that buyers are losing strength. This signals a potential short trade. Let's recap. Price is at a level. A reversal pattern appears, for example, bullish engulfing. Volume is rising. When all of this aligns, there is a high probability of a successful trade. Important, do not trade based on the Money Flow Index alone. Combine it with support and resistance levels and candlestick patterns for accurate entries. Tips for successful volume-based trading. Always check the context. Volume is fuel, but price gives direction. Use support and resistance levels and patterns for confirmation. Do not trade Forex using volume. Broker data does not show the full picture, unlike the stock market. Test your settings. For the volume oscillator, adjust periods to fit your time frame, 14 and 28 for daily charts, 5 and 20 for short term. Be patient. Wait for signals from price, patterns, and volume to align. This increases the chance of success. Thank you for watching, and see you in the next video.